I mean, I buy your argument that the Fed got it wrong. Number one, they kept putting money into the economy at a rapid pace. Number two, they seem to be saying that inflation is where it is because the economy is strong. It isn't, and that the labor market is strong and wages are getting out of control. They really aren't. But why does that matter? What you've got is inflation. So what really matters is what you do about that, not how you explain the inflation, right, Charlie, or I'm wrong?
Well, it matters. If the analogy I use is if you walk into your doctor's office and you've got a bad case of COVID, and he says he denies you have COVID for 2 years, and then he says, okay, I admit you have COVID, and the way I'm going to fix it is by bleeding you with leeches. That's what's happened now, is that the Fed was wrong for 2 years. They not only didn't see inflation, they made it worse by pumping $80 to $90 billion of cash into the economy. You had a great graph showing M2 money supply increasing 40%. And now they think the way to fix this inflation is by messing up the economy. That's a bad answer. That's like putting leeches on a
bring out the leeches.
Body.
Let's try some cupping, huh? What about that?
Right.
So,
now,
okay, go ahead.
The
continue.
graph you have, just quickly, Tyler, the graph you have up on the screen shows the money supply, but the good news is it has finally started to level out. So since March, the money supply hasn't gone up at all. And so finally, we've got about 4 or 5 months of no growth in the money supply. That is going to mean that we get a slowdown in inflation, but there is a lag. And so for the rest of the year, we're going to have 8% inflation or so. But next year, it'll be down a little, probably 5 to 6%. But it's not going to be helped by the Fed trying to crush the economy.
So is there, well, so that leads me to my next question. Is there a prescription, Dr. Bobrinskoy, that doesn't involve leeches and doesn't involve cupping that would get us where we need to go that the Fed is overlooking? Or are they doing fundamentally using what tools they have? What other tools could they use?
Yeah, I would just like them to not make things worse. And the good news is things are getting better. Indicators are all over the place that things are getting better. Shipping costs are down. Commodity prices have stopped going up. Wages are up 5%, but that trailed big increases in inflation. So wages are actually a mild depressant of CPI. So there's lots of indications that the worst is behind us. We just don't want them to make things worse. And of course, the people who get hurt the most by a recession are those in the lower economic stratas of the country. And so it really just is bad policy to try to bring on a recession. Yeah,
so just sort of go a little easier, maybe don't slam the brakes as hard as they have been doing. So let's get to some kinds of businesses that you think might profit and do well in the market, given what you see.
We're going to have an inflationary economy for at least another year. And in this kind of market, there are certain companies with hard assets that can prosper in an inflationary environment. And unfortunately, some of those are oil companies that have hard assets in the ground. Fertilizer companies that have potash in the ground are going to do well. And real estate actually can do well. Farmland can do well in an inflationary environment. So some of these stocks are very cheap. Apache is trading at 4 times earnings. Mosaic, the fertilizer company, trading at 5 times earnings. And Madison Square Garden, which I always talk about on your show, has wonderful real estate. It's an extremely cheap stock for some complicated reasons. They own Madison Square Garden in Midtown Manhattan, and that's a wonderful stock for an inflationary environment.
Charlie, great to see you. We appreciate Dr. Bobrinskoy. That's what we're going to call you now.
Thanks for having me, Doc.
Thank you so much.